The impacts of JobKeeper and Jobseeker have been really beneficial for customers, and we certainly see that support those customers. And we do urge those customers, by the way, that are in financial hardship to contact us, because we're working with those ones that are. And the full brunt has been really worn by the small to medium enterprises, where a lot of the demand has come down in those sectors, as you know, like services, travel, hospitality. So when we look forward, it is really that time that you've just focused on, when JobKeeper and Jobseeker are due to come off or be restructured, combined with the mortgage relief that you've seen that's been provided. And that really is the moment that I think that we're most focused on in terms of the consumer. So I think between business and governments, I think that's the key focus for us now, to actually ensure that's a smooth transition.
So is that going to involve ongoing customised support for certain sectors from government? And what role do you think the government will play in your sector?
Well, to date, what's happened is that we've actually got no disconnections going to any customer that's experiencing that hardship, and we're pleased to say that that support's been provided right across. And that continues to at least the 31st of July. What we then would look towards with working with governments is to what is the level of support required going forward. And I think you're right, I think it gets to be much more specific. Now, that's as it relates to the consumer. I think separately how it impacts some particular sectors that are most hit is yet to play out.
Clearly there have been job cuts in big companies, including Qantas and Oil Search in your sector recently. Is Origin going to be hit in the same way?
Well, what we've done at Origin, and if you focus particularly on Oil Search and the oil and gas sector, you've seen there have been cuts across the globe based on those lower commodity prices and activity. What we did is we've announced that we would reduce the break-even price of producing at APLNG down to $29 to $32 US a barrel. And at the same time, we announced that we would reduce our capital expenditure by between 300 and 400 million over the next financial year. And that really largely impacts the contractors in our business. But that's where our focus is right now.
So we're not going to see hundreds go at Origin Energy in any near term?
Certainly not made any commitments to that to date, no.
Now, Frank, everybody's talking about a manufacturing gas-led recovery, including Andrew Liveris, head of the Manufacturing Task Force, playing into the COVID Commission. He's talking about a $4 gas price in the not-too-distant future. What do you think of that?
Well, firstly, just in terms of the overall review, I think it's good that we're focusing on manufacturing, and we certainly support many of the recommendations that come from that. I haven't seen the report, but for what's been reported so far, we think there's some positive steps there around approvals to get gas developed, moving manufacturing closer to where the resource is, and also the regulatory processes. I think they're all really good positives in terms of putting downward pressure on gas. I think at the same time we need to be realistic about what is the cost of production of gas. And from our perspective on the East Coast, that certainly the $4 delivered gas is not a realistic target.
So we've heard this week from the likes of Orica and Incitec Pivot, and they are arguing that there should be a reset and that we should at last sever the connection between the domestic gas price and export prices.
Well, a lot of the developments that occurred, particularly in Queensland, would only have occurred based on the large volumes contracted offshore. So I think what we need to think about is what's going to spur the capital to be developed.
Very good point. But they say they would not have invested in manufacturing if they hadn't been expecting a lower gas price in order to deliver that.
Well, the historical market for gas, you're right, had it all supplied to the domestic. It's when it connected to the international markets that it started to therefore represent a price that I believe netted back to that international market. And that's really driven by that supply demand. And there were times through the transition of those projects that really did tighten the market and gas prices got too high. The market is now moving down, and clearly for contracts it'll move down over time. In the case of some of those larger commercial users of gas, it will come down to the length of term of contractors, to the price and all those types of things.
Now, you recently had your 500th cargo coming out of Curtis Island. How do you think the East Coast is going to be supplied with gas? Because at the moment you supply about 30% of it?
We do supply 30% to the East Coast, and have done that all the way through as a project at APLNG. What I think really the market over time, and the focus that I think has been recently, is that in the southern states, most of the data that's produced by AEMO, the market operator, has a decline in production coming from the Gippsland assets.
So are we going to get a gas cliff? People talk about that?
Well, certainly the market shows that it falls off through the middle of the next decade. As to the precise nature of that and demand, that could play a part. But the expectation is it will come off materially over that in the middle of the decade. And so therefore it becomes what's going to replace that. Will more gas be transported from the northern states? Will an import terminal be required, and will projects like Narrabri and other developments in those states, they'll all be vying for that market. And I think that's what we will see, is we'll see some or all of those solutions.
If some or all of those solutions do get through, will that contribute to pressure for lower gas prices?
Well, supply does. By increasing supply, by definition it does, but it would be limited to the extent of the cost of that production, of that new production. And I think that's where a lot of the focus has been, what's the cost of that new production. But yes, supply is the way you bring prices down.
On the new energy side, you've recently made a big investment into Octopus Energy. Now, to what extent is that a bit of a game changer for the company, but also for Australians?
Well, it's a very exciting opportunity for us, and I think it's probably worth stating that we do see the energy market and the retail energy market really rapidly evolving, and continues to do so. And as we play forward into the future with a rise in distributed energy assets and data, we just think it's going to be an exciting time for more products and services for customers. But it all does start with a very good customer experience, building trust and doing that at lower cost. And the investment in Octopus really does deal with that, in our opinion, and that's why it's so exciting. They're a company that are a rapidly growing retailer. And
what do they offer the retail market that's different?
What they offer is they have #1 customer satisfaction and the lowest cost to serve by a margin. They do a tremendous job, and it really is their ability to reimagine the way the technology, operating model and culture come together. They have built the market-leading technology, which they call Kraken. And when you really look at that, the secret ingredient I think they've come up with, which is not easy to replicate, is they've actually designed the technology that makes the frontline agent's job incredibly easy by virtue of the automation behind. And they centre everything around the customer, whereas historically, you'll all know, that most of the energy sector is centred around the meter, which is not the customer, and so they make it very easy.
So Friends of the Earth got a little bit snippy about your investment in Octopus. How do you respond to the idea of a dirtying of clean energy as compared with old energy, which is trying to clean up?
Yeah, no, look, it's up to Friends of Earth and their relationship as to what they decide they'll do with Octopus. Like, we've made it very clear about that we would be moving out of coal over time. We have to do it responsibly, though. We have to actually make sure the affordability of energy for our customers, while we go to lower emissions and decarbonise, we set targets. And I think that will continue to occur, and we will do that. We've invested a lot in renewable energy, lots of off-take contracts that we've supported, the development of assets for. And we have to do the right thing by our customers that balance those. But make no bones about it, we are moving towards much, much lower emissions over time, and we will demonstrate progress on that.
Government obviously is moving through this energy transition without much of a policy. Looking at firming up of energy, Frank, I guess what creates the uncertainty for you around investment in this space?
It is the key policy issue that the government is now wrestling with, and it's the key issue for the industry, because with the rapid increase in renewable energy, we will need those firming generation technologies to support it when it's not operating, through when the sun or the wind aren't there.
Well, ideally, it should be gas. I mean, we all hear.
Yeah, it will be a combination of things. There's no doubt things like snowy hydro will come in over time, and so pumped hydro is also an opportunity, but gas plays a key role. You're absolutely right. Its ability to rapidly start and operate flexibly alongside renewables is why it's so critical to the puzzle. I think the key thing is that the private sector, if it now makes a commitment to that, needs to invest in multi-decade assets. They're expensive. There's a lot of capital invested up front. And so really it's the confidence around that you will know the settings in which you make that investment. And as we've seen over the last 5 to 10 years, those settings have changed. And I think the market is now, with government, the industry is working towards how do we make those investments with confidence. And that's been the key barrier today.
Frank Calabria, it is always great to get your insights. Thank you very much.
Thanks very much, Chicky.